All right, Joe Terranova, I'm going to begin with you today. I'm not going to ask you what the Fed's going to do because nobody really knows, and it's pretty much telegraphed. We think they're going to announce the taper at the very least. I'm going to ask you what the market can bear.
So I think you have to look at it as what's priced in. Hawkishness from the chairman, Scott, I think that's priced in. If he is just as hawkish as the market expected, then a lot of the selling pressure that's currently going on in the laggards of the market, you could attribute a lot of that to tax loss selling. But, you know, look across the board, whether it's biotech, whether it's hypergrowth, the airlines, Boeing, Chinese stocks, that continues. However, I think the upside surprise is there. The possibility that the chairman is not as hawkish. And in that case, I think the market holds here at the 50-day moving average, and you get a nice snapback rally through the remainder of the year.
Weiss, I'll tell you, okay, I agree with Joe. The taper's in, right? We got to figure, I mean, the market expects that the Fed is going to announce the taper today. What matters most, I think, is the dots, the so-called dots. When are they going to raise rates? Do you have more people thinking you're going to raise rates by greater amounts sooner than we think? That's what we need to pay attention to. It's not the taper. It's the actual course of hiking rates, right?
That's absolutely correct. And you have to pay attention to near-term dots because the Fed is notorious, as is everybody, for getting the longer-term forecast wrong. So that'll give us, those near-term dots, that'll give us an indication of how much the Fed is focusing on bringing those rate increases early. I'd say right now the market's comfortable with 2 or uncomfortable with 2, but it's traded on 2 rate increases beginning possibly in May. If they bring that forward more rate increases, and as part of those dots, you also have to look at what their expectations are for inflation. And that'll be in the dot plot release as well. So those are the factors, more so than what Powell says, that you're going to have to focus on. But it seems today, at least, where the market's of two minds. I mean, while the Dow and S&P are focused on what Fauci's saying, it seems that the NASDAQ continues to focus on interest rates and what's going to come out of the Fed. I find that dichotomy very, very interesting today.
I want to know, Degas, if you think Powell can thread the needle and if that's what he has to do, right? I mean, he made his pivot already, so he's already turned hawkish. He can't come out today necessarily and be even more hawkish than we expect, or the market's going to have a real problem with that.
Yeah, so I don't expect anything new to come out of this announcement. He's already forecasted what he's going to say, and so he's going to have to stick with that because we don't think that the Omicron variant is going to be a big difference, and that's the only reason why he would go hawkish at this point. So we believe that the market's anticipating a more hawkish view. He's going to have to follow through with that, and the market—that's what the market expects.
Unless, Jenny, Joe's right and he's more dovish than we think. I mean, we've already decided now he's gone from dovish Fed chair to he had the pivot, and now he's Mr. Hawk. And what if he comes out today and he's like, you know what? I see what's happening with the Omicron variant, and it's a downside risk. It's a significant potential. I'm just trying to think of the Fed speak that they have. It's a significant potential downside risk to growth. If he thinks that, if he says that, the market may take that as he's a little more dovish. They'll taper, but they'll wait and see. That could affect the dot plot as well and where we think interest rates are going to happen, when the first one could happen, how many we'll get in 2022.
So I think, unlike Joe, I think if he comes out and he's a little more dovish, which, by the way, I think is very unlikely, I think that the market could be really scared by that. Because what he'd ultimately be saying is the economy's weaker than we expect. Therefore, we're going to be more dovish. That could be one implication. Another implication could be like, whoa, he's not getting this. Inflation's going to be worse than expected. So to me, a little bit of dovishness is not a good sign. It's funny. I put something on Twitter the other day and I said valuation matters. And someone responded, no, the only thing that matters is the Fed. And I think that's not right. But I think the psychology of that is really interesting in that we have become so dependent on the Fed to lead us. And that dependence means that we cannot tolerate surprises. So he's become more hawkish, as Degas and Steve said, and he has to continue on that path because what Jerome Powell knows, what he knows inside and out, is that The market can't tolerate surprises. And I've said this before, I think he's become like a real master of behavioral economics and behavioral finance. And I think he leads the horse to water, we investors being the horse. I think he leads us to water over and over, and he paves the way over and over. So I expect no surprises. He knows that that's probably the worst thing he can do.
He's not going to say today,
if he were
though.
dovish, I'd be more nervous.